Welcome to EQAI Morning Briefing for September 4th, your daily dose of the top stories shaping our world. I'm your host, and today we've got a packed lineup of news from dating apps to the stock market and even some celebrity real estate. Let's dive in. First up, let's talk about the modern dating scene. According to a recent article, dating apps like Tinder, Hinge, The League, and Raya are becoming hotbeds for status-conscious singletons looking for wealthy partners. These platforms are essentially marketing tools for the upwardly mobile, creating a crowded space where everyone seems to be on the hunt for someone rich. Switching gears to the stock market, Jim Cramer has identified his top 10 things to watch on this Wednesday. The September sell-off continues, adding to investor anxiety. Cramer also explained why he thinks Dell is an incredible bargain right now, despite the turbulence. Speaking of finance, a staggering 82% of Americans believe it's harder to retire comfortably now than it was for their parents. With the dream of retiring at 65 slipping away, younger Americans are finding it increasingly challenging to save enough for a comfortable retirement. In tech news, Nvidia's stock is falling, but there are two factors that could reignite its momentum. Investors need more confidence in the gross margin trajectory once Blackwell volumes ramp up and proof that AI investments are generating customer returns. Over in the cryptocurrency world, Bitcoin experienced an overnight sell-off, dropping below $56,000 before stabilizing. This comes as part of a broader market sell-off that started on Tuesday. Lyft announced it will cut some jobs as it restructures its bikes and scooters operation, resulting in a charge of up to $46 million. The move is part of a broader effort to streamline operations and cut costs. The U.S. trade gap widened sharply in July to its highest level in over 2 years, reaching $78.8 billion as imports surged. Meanwhile, U.S. crude oil prices rose from a 9-month low, trading near $71 per barrel after a recent sell-off. Dollar Tree shares slid after the company cut its full-year forecast, citing increasing pressure on its core customers due to pricier food and everyday costs. This comes as a blow to discount retailers who are already feeling the pinch. On a brighter note, Dick's Sporting Goods saw its stock rise as the retailer posted strong profit and revenue beating analyst estimates. It's a rare piece of good news in an otherwise volatile market. In the world of commodities, both copper and oil prices have seen significant declines in the third quarter, raising concerns about a slowdown in economic demand from China and the U.S. This is particularly troubling for investors keeping an eye on global economic health. Labor tensions are escalating as key longshoremen labor union meetings begin, sparking fears of potential strikes at East Coast and Gulf Coast ports. This could have substantial implications for supply chains and the broader economy. Let's not forget about tech giants. Despite their unwillingness to police themselves, companies like Meta, Alphabet, and others are pushing to create rules governing digital transformation and artificial intelligence. It's a power play that could shape the future of tech regulation. In real estate news, mortgage rates have fallen for the 5th week in a row, encouraging home buyers to wade back into the housing market. Mortgage applications rose 1.6% last week, according to the Mortgage Bankers Association. Nvidia's top spot on the S&P 500 might not be a good thing, warns J.P. Morgan. Historically, market leaders have seen their market caps fall after achieving such heights. Treasury yields slipped as fears of a U.S. economic downturn grew, with investors flocking to perceived safe haven assets. This comes amid a wave of global risk aversion. In the entertainment world, NFL Hall of Famer Jonathan Ogden has listed his country club mega mansion in Las Vegas for $3.8 million. Meanwhile, Super Bowl champ Drew Brees is auctioning off an amazing Montana A-frame built on the reality show Treehouse Masters. Finally, let's touch on some lighter topics. The IRS has made limited progress in figuring out audit rates for those making under $400,000, despite receiving billions to strengthen enforcement measures. And if you're feeling your age, research suggests you might really feel it at 44 or 60, but there are ways to manage it. That's all for today's EQAI Morning Briefing. Thanks for tuning in, and be sure to subscribe for your daily update on the top stories shaping our world. Have a great day.